Well, what a spicy session it turned out to be for Zomato. This Tuesday, the shares clocked a rally to the tune of 19% in intraday trade, and in fact, it has seen its best day ever since it listed on the Lal Street. In fact, market cap also crossed the 50,000 crore rupee mark in a very long time. But what is it that triggered such a strong rally on the shares of Zomato, despite the fact that its losses have nearly tripled? Compared to last year? Well, first of all, it was the revenues from operations that nearly doubled from last year, and in fact, the company also expects its adjusted revenues to grow in double digits in the coming quarter. When you look at the gross order value, well, that has in fact hit record high of 5,850 crore rupees and seen a 77% jump compared to last year. Management has also highlighted its shift to aggressive cash conservation. Well, that's a departure from the cash burn that we had seen in recent times when the company had embarked on an acquisition spree, and that had led to a lot of concerns on the profitability front and had triggered sharp losses on the stock. But all that has changed because the management has said that it will aggressively look to conserve cash and will refrain from making any fresh investments in the quick commerce space. Now, Zomato has over 12,000 crore rupees in unrestricted cash, and its capital needs are limited at this juncture. Well, that's something that the management had added, and now this comes as music to the ears of investors who were really worried when it comes to profitability for the new age tech firm. Global brokerages have reacted positively to Zomato's fourth quarter performance. JP Morgan has noted that the adjusted EBITDA loss is on the decline for Zomato, and it has kept a target of 130 rupees a share, which is nearly double of its current market price. Moving on to UBS, well, it believes that the growth drivers for Zomato are in place, and it has also kept a target of 130 rupees on the shares. Morgan Stanley has a buy rating on the stock and sees a target of 135 rupees on the shares. And lastly, Jefferies has pegged a target of 100 rupees on each share, and it believes that the first quarter loss is expected to come down substantially for the company. So all in all, things are looking hot and sumptuous for Zomato going forward, and the future is looking a little bright, especially after the kind of grubbing that we have seen for new age tech platforms in the recent times.